Let's be real for a second. No one wants to be house poor, living in a home where the mortgage payment eats up your entire paycheck. Well, today I'm going to walk you through how to use a mortgage calculator. That way you can balance what you want with what you can afford. And by the end of this video, you'll be able to confidently search for homes that won't leave you broke by the end of the month. Hi, my name is Ian Collins, your San Diego realtor, and today I'm going to be covering a topic that applies here in San Diego, but you can use this anywhere in the country. I would prefer you do this and establish your budget before you talk to a lender, but you can do this afterwards as well. We're going to go in how to put in the numbers. We're going to go over the 3 different scenarios, VA, FHA, and conventional, so you can see how to adjust the numbers. And I will show you what I do with my clients here in San Diego and how to find the information for your area wherever you're in. But first, why does this even matter? The lender gives you pre-approval, right? Well, they do, but that's how much the bank's willing to lend you based on your debt to income and your credit score and all these other factors. But that doesn't necessarily mean it's right for you and your personal budget. Think of it like going to the grocery store and not looking at prices. When you go to check out, you're going to be incredibly surprised, right? Unfortunately, this is one of the biggest mistakes homebuyers make when calculating affordability is they just go by the pre-approved amount and not by their own personal budget. So what's a mortgage calculator? A mortgage calculator is essentially a calculator that takes into account the listing price, the interest, the taxes you're going to have on the home, and the insurance rate, and then other stuff too, like HOA or homeowners association dues, to kind of give you an estimation of what your mortgage payment is going to look at. Think of it like a GPS giving you an idea of how far you can go without getting lost. So today we're going to use the Zillow calculator since all of you guys are on this app anyway, and I'm going to teach you how to use it. So let's go over to the computer. So first thing you do is put in Zillow mortgage calculator. Bam. And it's the first one that pops up. So we're going to click on it. Boom. Pretty straightforward, right? $1,800 a month mortgage. You wish in San Diego. So what we're going to do first, before we're doing that, let's cover what it would look like for a first-time home buyer, someone putting below 20%. So let's go with 3.5% down. Boom. You'll see a lot of this stuff will change. 30-year fix, perfect interest rate. For some reason, Zillow will always go to some ridiculously low interest rate. For the nature of this, you always want to over anticipate expenses. That way you're not estimating something that's unrealistic. If you go and be like, hey, I can only afford this home if it's a 4.5% interest rates and interest rates go up to 5.5%, you're screwed. I'd rather you estimate high, and then if interest rates are lower, great. So let's put 6.5 or whatever, 6. All right. Even Zillow doesn't want to play ball. There we go. So now we go down to advanced, right? Make sure you include PMI, which is property mortgage insurance. When you use the first-time homebuyer program, you're going to have a PMI. So don't unclick that. So you'll see property taxes here for San Diego. It's 1.25%. If you're in another county or state, you can easily look it up on the internet and Google your county and be like, what is the property tax for my county? And they're pretty straightforward. I can put a link below if you need help finding that. For home insurance, now if we're looking at single family homes in San Diego, I always recommend you do $200 a month, which is $2,400. And if it's a condo or townhouse, $100 a month or $1,200. And then lastly, HOA dues. Say you're living in Chula Vista or Eastlake, you're gonna have HOA in Melrose. So for intents of this explanation, let's just pretend we're buying something in Eastlake, Chula Vista, and our HOA in Melrose is $150 combined. Yeah. So now our payment is $2,709 a month. Not really, we haven't done the home price yet. So let's start looking at home prices. Let's start at $800,000, see what it does. Boom. Whoa, one more zero. It's like, man, that's really good. And when you do this, make sure you go down to interest rates, because for whatever reason, it likes to jump down to something unrealistic. So keep your eye on the interest rate. With all things considered, a 3.5% down payment, you would have to pay $28,000 down. And this is not including closing costs. We'll get into that later. But for $28,000 down plus closing costs, your mortgage would be right around $6,700. So if you have pre-approved for this, now you know. But maybe $6,600 is too much for a first-time home buyer. Let's go down a little bit. Now let's see 700. 1, 2, 3. So now it dropped down about what, $600, $700. So now you can see maybe you're looking at a $700 home versus an $800 home. And now let's take it a step further. Remember, this is still for first-time home buyers. Say we go down and we want to do, okay, maybe let's do a condo or a townhouse. Change the number, because remember, the HOA is going to be a little bit higher, but the monthly or the yearly insurance will be a little bit lower. Let's do 450. It's probably a good number. Bam. So now you'll see for a $700,000 condo or townhome, you're looking at even more than you would a single family home. So this will allow you to balance the numbers. So remember, single family homes, $2,400, 1.25% for taxes. Now, on to the next one, which is VA, which is incredibly different. Not incredibly different, but only thing we're going to check different, two things. Put 0% down, boom, and you're going to unclick PMI. So for that same $700,000 condo, you're going to pay $5,700 a month. Remember, you keep the same with the home insurance and HOA dues. Now, if we went back to the $800,000 home, what it $150 was it? $1,200 a year for $2,400 a year for insurance. We're looking at $6,200. So it's about $700 cheaper for a VA. So now let's go into conventional, right? So conventional, kind of like VA, you can keep PMI off because you're hopefully doing, if you're doing 20% conventional, if it's still under 20%, you need to have that PMI on there. And then boom. Now you see with a 20% down payment, which is 160 grand, good on you if you're a first time home buyer doing that, your mortgage just decreased to $5,000 a month. So now you kind of get an idea, right? So go through, put the home price where it's at, put the down payment based on whatever program you want to use. First time home buyer, 3.5%, VA 0, conventional up to 20% or however much you want to put down. I would argue don't put more than 20% down, keep the money in your pocket. Keep the interest rate on the higher end, and then when you go and talk to your lender, if it's lower, fantastic. We prep for the worst and the best happen, and perfect, we'll take that. Make sure you include PMI for first-time home buyers or conventional loans that are under 5%. Property taxes for San Diego is 1.25%, and if you're in a different county or area, make sure you go on. The county treasurer, I believe, will public it, but Google will tell you in 2 seconds. And then for single family homes, this is one caveat that I didn't cover. This is for California, the home insurance. California, Florida, very difficult for home insurance, especially in the fire areas. But if you live in some of these other places, the easiest way to go about finding what the home insurance is for your area is to call one of the agents around there. State Farm, Geico, whoever has an actual person that works in the local area, and just talk to them. Like, hey, I'm thinking about buying a home. What is the average rate insurance monthly premium that I will pay for a single family home versus a condo or townhome? And they'll be quick to kind of give you an idea of the range. Always estimate on the high side, like with everything whenever you're estimating finances and costs, but that's how you find it in your local neighborhood outside of San Diego. And then lastly, HOA dues. For San Diego, we usually recommend applying $450 to $500 a month for HOA. Imagine if it was $500,000 a month HOA. $450 to $500 a month for HOA dues, but that will differ based on your location. And that's easy if you spend a couple times scrolling on Zillow and start paying attention to the areas that you're looking for and seeing the range of HOA. So I know that seemed like a lot, but basically think of it like a sandwich and you're just building layers on it as you go down. And hopefully I gave you some information of where to find the information so you can best predict what your payment's going to be, and you kind of balance that wants with what you can actually buy in the marketplace. But before we go on to common pitfalls that people do when they use this, make sure to remember closing costs. It is always going to be a thing for everybody. If you do get into a situation where you can negotiate the seller to pay for closing costs, fantastic. But don't go into buying a home hoping that's going to happen, because you're going to limit your opportunities and you're going to miss out. Perfect example, I missed out on 2 or 3 homes when I bought my first home 5 years ago because I was trying to get closing costs paid for, and I had the money, but I was being cheap. And at the end of the day, I missed out on 4 homes. And one of them still bothers me to this day that I didn't get it, all because I was trying to save that extra penny. When in reality, if I would have bought that dream home, now it's worth $200,000 more. So more of the story, save up, 2 to 2.5% for closing costs. Once you figure out what your budget is of where you want to land with home prices, like the price of the home that you're looking to buy based on what the mortgage is going to be, then start saving up for that down payment for FHA or conventional and closing costs. Now you have a goal to reach. Next, common mistakes people make when using a mortgage calculator. I sort of alluded to it when we were going through the Zillow mortgage calculator, but most people underestimate how much they're going to pay for interest and taxes and overestimate how good of a mortgage rate they're going to get. So essentially, they're trying to patent the stats to make it so that you can afford that dream home. And I get it. It's easy to get carried away, especially when you're trying to buy a home. But the trick is to make sure that you're incredibly hard on yourself. And it's better to plan for the worst and get somewhere below that than it is to plan for this optimal scenario and then it doesn't happen and you can't buy your home. So be incredibly hard on yourself with interest rate. Go higher. Go 0.5% higher. Make sure that the insurance rate and how much you're going to pay insurance is on the high side, especially when you're going to look it up online. And then for your insurance, whatever that range that insurance agent tells you, make sure you go to the right of that. And so you can plan for the worst. And then if it does, you pay less than what they tell you, fantastic, but you're well prepared. Because at the end of the day, you don't want to be eating ramen in your dream kitchen because you can't afford to pay the bills. So now you should feel confident in being able to use a mortgage calculator to define your own budget. So the next step is to go and talk to a lender, and they will give you the ultimate stamp of approval of what you're pre-approved for. And you will go into that conversation already kind of having a budget in mind, which is going to be fantastic. If you have any questions, I'm going to put a link below in the description where you can set up a 15-minute discovery call and I can explain everything to you again. Save the video or send it to someone that you know that's buying a home. And now that we covered this, the next video you need to watch is this one right here, where it's talking about how to save up for a down payment without killing yourself. Thanks again for watching. Please like and subscribe to the channel, and I will see you next video.